Welcome to the MOBILIST Programme's podcast series on scaling securitization and development finance. In this first episode, we will unpack a recent securitization transaction that has the potential to establish a new asset class, finally bridging the gap between MDBs and institutional investors from the private sector. I am, of course, talking about the launch and the first issuance of the International Finance Corporation's new Emerging Market Securitization Program, also known as the EMSP. Here to help me unpack what makes the EMSP such a groundbreaking transaction are two key figures behind the EMSP who have worked tirelessly to make it a reality. Kruskaia Sierra-Escalante, Senior Manager and Global Head for Co-Investor Solutions at the International Finance Corporation, and Rabih Kanaan, who lead the EMSP transaction at IFC. A warm welcome to you both.
Thank you very much, Tara. A pleasure to be with you.
Thanks for having us.
So let's start with the basics. Rabih and Kruskaia, for those unfamiliar with the EMSP, could you provide a brief overview of what it is and what the transaction entails?
Thank you, Tara. And maybe we go even a bit, one more step back, for those that are unfamiliar with securitization. This is a financial mechanism that allows us to pool a set of transactions in a way that, is very familiar to investors. So we take the loans that IFC makes to individual projects in emerging markets, pull it all together, and then form a security that is familiar to investors. So from that perspective, what we did in this inaugural issuance is we put together loans from 57 companies across emerging markets. And the beauty of this, it was well diversified, not only from the perspective of regions, but also from the perspective of sectors, which gives a lot of comfort to investors. So you put it all together, and then you have a senior tranche, which was AAA, rated by Moody's, and that basically issued notes that senior investors, institutional investors could purchase. Then we had a mezzanine tranche that in this particular issuance, IFC retained, but then we were able to get 100% wrap from global private sector insurers. And then in the equity, which is very important, and probably Rabih will get much more into that as well, we had IFC retaining a portion of it, and that's very important for investors because they want skin in the game from the originator. So IFC retained, but we also had a critical strategic piece from MOBILIST. And, it was really wonderful that we could come together, to complete this package. So I'll stop there. Rabih, anything to add?
Yeah, Kruskaia, thank you. I think you've summarized it well. What I would add also is another important angle on the senior notes were listed on the London Stock Exchange. And I'm happy to get into sort of the benefits of pursuing public markets. So maybe, at some point, Tara, we can discuss that.
We must get to that. MOBILIST is, of course, very proud to have made a $25 million equity investment in this first issuance of the EMSP. Can you tell us a bit more about the role the MOBILIST investment played in the overall transaction and why this was significant?
So the short answer, Tara, is it was absolutely critical. MOBILIST coming in with a 25 million equity investment in the equity tranche was absolutely critical. First and foremost, what I would say is equity capital is hard to come by, let alone come by in a structure that hasn't been attempted in a long time and maybe ever. And so the way I think about it is, the analogy that I like to always talk about is it's like building a pyramid. Essentially, in order for you to build a pyramid successfully, you need to have a strong foundation. You need to have a resilient foundation. You need to have what I consider is the shock absorber, which is the equity layer, which is where MOBILIST came in as a strategic investor. And in order for the investors in the middle layer, the mezzanine layer, and the senior layer to come in confidently, they needed to have that first loss buffer. In my view, I don't see it as, MOBILIST coming in as just another investor in the capital stack, but, they're coming in as a strategic investor, as a catalytic capital that's helping us redefine the way we could channel and finance emerging market projects.
Rabih, maybe I complement by saying, again, Tara, you spoke before about this goal of helping create a new asset class. And again, as Rabih had said, without this belief and this alignment in, basically objective of trying to move private capital mobilization to a different level with investors that before have not taken emerging market risk directly, it's really, a wonderful opportunity. And this first issuance alone effectively was 510, million that we were able to issue. 450, it's private capital mobilization. The ratio of what we were able to attract is quite significant when you consider that, generally, even in an individual transaction, you may be getting 1 to 2 when we put, public capital to private capital. But this one really was a wonderful opportunity to bring 450 million of private capital.
There's so many layers to this. Part of it is what can be offered to institutional investors, what is more liquid, tradable, what has higher capital mobilization rates. And then there's another part of this which relates to the overall financial architecture and the role that DFIs specifically play, a role which, by the way, has been challenged over the years, whether by funding flows, changes in capital adequacy frameworks, and so on. You mentioned earlier that securitization transactions, such as EMSP, convert illiquid assets into tradable securities. And of course, going back to the CAF framework, MDBs are being encouraged by their shareholders to do just that, to transfer risk to the private sector and thus increase their financial firepower. So was this part of the motivation of what drove this in the first place?
Absolutely, Tara. I think that, as development finance institutions, we are very aware that we cannot do this alone. We need the private sector to come alongside to be able to create that multiplier effect. That was the motivation, from IFC to come into this, cash securitization structure to see how we could maximize that ability of the private sector to really look at different opportunities of risk reward and come where they were most comfortable. Over time, we really would like to see if they come across all the capital stack as well, right? No, even on the equity on the private side as well. But that will take some time. So for us, the motivation was to respond to the G20 call for more efficient capital, for velocity in our balance sheet, and maybe Rabih, you can get into a little bit more detail. But the private capital mobilization angle was very important. We really want to see the opportunity in this case to test a different type of securitization. Some of our fellow MDBs and DFIs had done the synthetic securitization, but from our perspective, we really analyze what are some of the opportunities, which are some of the investors that have not come into emerging markets. Can we really start pushing through different angles this private capital mobilization? And why do we want the private capital mobilization? It's not for its own sake. For us, jobs are important. For us, being able to make a difference in the lives of the people in emerging markets where, we are working with the private sector, with SMEs, it's very important. So, it's not only about the financial mechanics of it, but what it attracts in terms of development impact. So, Rabih, do you want to add?
Yeah, again, if I'm an investor, I think the proposition of packaging, 57, 58 loans, hopefully more over time, these are assets that are privately held, bilaterally negotiated. All of a sudden, you're packaging them into a pool, and then you're issuing securities against them. Securities are what investors understand. It's essentially giving them an instrument that they're quite familiar with. If you think about it, CLOs are quite mainstream in US and European markets. They combine together more than $1.3 trillion, $1.4 trillion, depending on who you ask. And so if you think about it, just providing them that channel that they understand quite nicely and giving them access to MDB assets for the first time has the potential to change the game in a big way. And we're very excited about that. And, we're just getting started. And we're already sort of thinking about when we're going to come into the market next to kind of just build that muscle memory and grow that ecosystem. But it's not only all about building an asset class, it also has tangible benefits for IFC for MDBs, what Kruskaia mentioned, the ability to create that balance sheet velocity, these instruments are actually fantastic to create that velocity because, you originate, you sell, you release your capital, and then you redeploy it. And so you're essentially magnifying impact to create jobs, to fulfill our development mandate.
And Tara, if you allow me, I think, Rabih mentioned we're already thinking about what's next. We're thinking what is next also as part of a bigger strategy. The World Bank Group Originate to Distribute is, really part of the strategy. EMSP is part one in this. But again, the key is how do we bring the private sector alongside so that we can amplify the development impact that we can have in emerging markets.
And we can already hear the velocity and momentum around that approach. You touched on this a little bit as far as linking to institutional investors at a broader scale, but I think it behooves us to double click on the point. Why list? Why list on the London Stock Exchange?
Yeah, maybe I can jump in here. So indeed, we listed on the London Stock Exchange the senior notes. And if you think about it, public markets essentially mediate 100 times more capital than MDB balance sheets, right? So that's where the large pools of institutional capital lie. In order for them to sort of take that leap of faith into emerging markets, they need transparency, right? So that product offers transparency. With transparency, you generate trust. With trust, investors can make informed investment decisions based on data. And then when we looked at the data, of course, we know our data. We've been in the market for, 50, 60 years. We have a proven track record. But what institutional investors were not familiar with is the fact that, it's not as bad as you think in emerging markets when you, properly structure transactions the way we've been doing it for a while. And so all of a sudden, it becomes an interesting proposition because it's not as bad as you think. You can diversify your asset allocation strategy and not just concentrated in US and European markets, but you can combine it with emerging markets and you can have a better, risk return profile. And that's a win-win for everybody.
And maybe, Rabih, to complement there, also, it took a little while to get to this messaging and conversation with some of the investors. If you start from a perspective that you haven't invested in emerging markets, as Rabih said, if you think that it is riskier than you believe, you expect returns that will be impossible to, crystallize. So I think the messaging of this is not as risky as you think. And, for that, the GEMS data, the GEMS consortium data has been really important as well to create that initial conversation with institutional investors. And we are seeing, as you mentioned, Tara, how it is resonating, right? So, now that the first issuance is out, there is a lot of interest in the market. Some investors that, were not looking at this, basically discussing with us the possibility of understanding more the transaction, what are the objectives that IFC has for this, whether it is a one-off or whether it is a program. So we have seen a lot of curiosity and momentum. And I think the listing also gives us transparency, as Rabih said, that will allow us to continue that conversation. This will not be a one-time conversation because, it's multiple different investors in different jurisdictions of different risk return profiles and preferences that we are trying to bring alongside. So I think this is a journey that has started, a journey that makes us very proud, but still has a lot of work ahead of us.
I agree 1,000-fold on the perceptions, the imbalanced perceptions of risk in regards to these emerging and frontier markets and our role in bridging those information gaps in order to unlock the capital. We actually have some great research by Risk Control precisely on the risk perception and a whole securitization microsite, which is just illustrating how much we believe in the potential of securitization and why we're happy to be on this journey alongside you, but there's nothing like hearing it directly from your own mouths. So are there any lessons or insights from this transaction that you'd like to share with other MDBs or DFIs that are considering securitization as a tool for capital mobilization?
Thank you, Tara, for that opportunity, because this is something that we have discussed for a long time with our fellow MDBs and DFIs, that for us, this is really a learning journey that we can really share and transfer. And we are still capturing the lessons ourselves because, we just closed the transaction. Maybe I'll start with a couple of early lessons. One thing that I will say is you need to be patient. As I mentioned, the conversations with investors are not the usual conversation. You understand me, I understand you, and therefore, let's go quickly. It's a lot more work that you need to do. We also had a wonderful engagement with rating agencies, but also it took time. Again, they need to understand what are the assets that we are putting, together, how we are optimizing a portfolio that they are reviewing. So it does take time. And we expect that over time, they also will be more familiar with what we are doing. In terms also of IFC understanding a structure that is very market facing. It's not something that is more, the bilateral structures that we tend to do, in which, it's quite easy to say, these are my requirements and therefore this is what I need to have. We were trying to do here, and I think Rabih, said, we're trying to adjust as much as we can to an instrument that the market understands. So it took quite a bit of internal learning as well. Do we have the systems? Do we have the data? How we can ensure that we are reporting what is needed? How we are ensuring that we are passing the cash flows on time as is needed? So there is a lot of internal work and there is a lot of external partnerships that need to be built on that. So I will say patience for me probably was one of the key lessons. And we are delighted that, then we can see that probably we can continue the momentum and hopefully other MDBs will continue also the momentum to review these to see if they come either with, cash securitizations or continue the journey with synthetic securitization. But as you said, Tara, that they see securitizations as a really nice instrument to complement the toolbox that we have for distribution. But Rabih, do you have any additional lessons that you want to share?
Yeah, Kruskaia, I think you've captured it all. What I would add is really the angle of building an ecosystem, Tara. I think that's critical. There's one Mobilist, there's one IFC. We need to have a lot more players across the value chain believe in that story. And by IFC and Mobilist taking the lead and building that market, we need more banks making markets. We need more investors believing the story. We need more legal firms looking at emerging markets. We need more managers, so it really takes a village. And then ultimately, I think what's going to really make a difference, in my view, is it's building liquidity, right? If you can build a liquid instrument, that changes the game because investors have that security, pun intended, in terms of going in and out of these positions. I think that will transform the asset class. So we need to think about how do we build liquidity over time. And again, the listing on the London Stock Exchange is a critical step, but there's so much more that we still need to do and continuously strive for.
Kruskaia, when you mentioned the issuance, you said the first issuance on the London Stock Exchange, and that to me had a glimmer of my next question, which is what's to come. Looking ahead, what is next? And what is next, Rabih, in terms of what you refer to as far as building this broader ecosystem and a broader MDB securitization market?
So, Tara, what is next for, IFC is sharing these lessons, right? So again, we have been engaging with other MDBs, with the, DFIs that were interested in hearing, our journey on what we are doing. Internally, we are also, basically collecting and sharing lessons of, what was more difficult, what was easier. And I want to reiterate the point that Rabih made. I mean, we had so many great partners along the journey. And probably if I start, I will forget, but, we've had the opportunity of having, BlackRock as a financial advisor at the beginning of the journey, Goldman Sachs being the structured back and distribution bank, really help us to put this together. But there are many other opportunities because for IFC, we see this as building a program. And, we think steady state in a few years, we want to be able to come to the market on a regular cadence, whether it's quarterly, whether it's semi-annual. This is something that will also need to be calibrated depending on origination. I think, again, what we are looking right now is at different possibilities when we come with the second securitization, whether the second securitization will be very similar to the first, or do we want to add other features that might be interesting to the market, but will take us a little bit of a longer time. One thing that, we are very clear is that we really want to leverage and capitalize on the momentum that the market has shown. We don't want to wait for too long, but we know that, as I mentioned earlier, patience is something that we learn from this. But I don't have an exact timing, but just know that from our perspective is really for IFC building a program that resonates in the market and allows others to come alongside because it makes sense to do so.
If I look back over the past several questions, you've pointed to several major outcomes for the ecosystem. Capital mobilization at scale, creating a whole new asset class, making things liquid so that institutional investors come on board in a much bigger way than has ever been done before for these markets, with the bigger outcome of massive job creation across these markets. But I would like, as a final question, give you all the floor to link this all back to the bigger vision. What is the bigger vision and impact that you hope this will have, whether it's across this first issuance or the issuances to come?
Tara, the bigger vision for us is to ensure that we are amplifying the impact that we can bring. You have mentioned job creation is essential. Working through private sector is essential for IFC as an MDB that focuses on the private sector. Working with the private sector for distribution, which is the case of this securitization program, is also essential because with our resources alone, we won't be able to do what we need to do to bring the SDG, to where they need to be. That's where we place this as a super important tool in the toolbox for us to generate that impact that we would like to, and I mentioned diversification. This is something that, investors really crave for. And what that gives us is the possibility as IFC to look at all of the emerging markets, given that we are basically playing, across the globe and bring those transactions in more developed, emerging markets, in less developed emerging markets and pull it together very similarly across sectors. So we can bring, tourism, we can, work through our financial institutions to reach SMEs, we can look at infrastructure and bring it there, manufacturing. So that was another great possibility. For us is really a template on how you can ensure that you are creating these partnerships with private sector, institutional investors, in particular, that those that have not come and take emerging market risk before. So for us, that's the big win and the big ambition.
Kruskaia, honestly, I don't have much to add, except I like to use the analogy of we've built a conveyor belt. And, once you build these rails, these conveyor belts, honestly, it becomes, how do you want to slice the portfolio? What are investors looking for? What are the risk returns that they're looking for? That's the beauty of structured finance. You're able to tailor it, according to varying risk profiles. And we've just sort of proven the concept that that's possible. How do we scale that? That's a different ballgame, but that's what we will be working on in the next few years. And hopefully we'll become more nimble about these things and go to the market on a very frequent basis.
Well, thank you both. I mean, it's 10 years on from the time the billions to trillions agenda has been declared, and the market has reacted, particularly in 2025, with concern about whether or not the current tool set was getting us there. And when I think about this transaction, it is such a big innovation with real potential to speed up that path dramatically. Join us again soon to learn more about another pioneering securitization transaction, or visit MOBILIST's dedicated securitization microsite to read our latest research. Until next time, thanks for listening.